Welcome to the Money Huddle, a podcast that discusses financial topics for families, retirees, and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Advisory Alpha. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Advisory Alpha may maintain positions in securities discussed on the program.
Welcome back to the Money Huddle. My name is Michael Baker. I'm here with Ross Marinell. Ross, how you doing today?
Hey, Michael. Good to be with you. It's a beautiful day in the Carolinas today. Spring is around the corner, my friend. Can you feel it?
Finally, we're finally getting some beautiful weather here. This is that period of time, if you live in the Carolinas, where we're going to get just a small number of weeks of reasonable temperature, and then it'll be like 95.
Onslaught of heat. The nice spring weather has resonated with me that I am zoomed out. I am zoomed out. Can't do it more virtual.
It is, man. It's getting harder to be inside doing virtual stuff when it's so beautiful outside. But I'll tell you a funny story. So we actually have some new neighbors that have moved in temporarily. My neighbor that lives beside me, he's doing like one of those lifetime bucket list things this year. He has got himself an RV, and because he can work remotely now, he's taking his RV and he's traveling the country and he's hitting all the national parks, and he's going to be doing all these hikes and stuff for the next couple of months, right? And so he's rented his house, and we have a new family next door. Which we've met them, and they seem to be super friendly. But what is so funny, what made me think of this is talking about being outside. Yesterday or the day before, I had to do a video call, and I was getting ready to do a video call. And I'm like, well, it's so beautiful out. I'm going to go outside and just sit outside, with my AirPods in and do this video call. Well, they have a dog, and the dog was in the backyard. And so this dog starts barking at me like I'm infringing on his turf. And I'm looking at him like, wait a minute, you're the stranger, buddy. Like, this is my home. It was just one of those weird moments where
the dogs have no concept of virtual meeting etiquette.
No, not at all. Not at all. So he won that round. He chased me back inside because he didn't stop barking.
It's always funny when somebody moves from a metropolitan area. They're like, wow, it's so loud in the suburbs. The suburbs are so loud. Everyone has a dog. Dogs are barking. Right. Someone's getting a porch built. There's lawnmowers going off. It is the loudest place to be. But it's good to be here today. So we've got quite a few things to pop around. I saw some comments from one of our listeners talking about NFTs. Dare we dive in and just talk briefly about what's happening in the non-fungible token world?
So we can go there. I have a feeling I know what story is tickling your curiosity to get going with that. Maybe I'm wrong. Let's see if I'm right.
Well, I just thought, so let's give a precursor to what an NFT is.
Okay.
Do you want to break down in layman's terms what a non-fungible token is? So we all are on this level playing field.
I will be extremely overly simplistic just for the sake of time, but an NFT stands for non-fungible token. Think of it like digital art. It's art or some type of collectible that lives on the blockchain, and you can create a like one of a kind signature or for that type of token, I guess you could say, for whatever the art is. So we're seeing right now, I think there's a band that's has recorded an album and made it like an NFT. We've seen there's all kinds of digital art that's being tokenized and being a one of a kind NFT. There's NBA highlights, highlights that are being like snipped and made into NFTs. It is redonkulous what's happening now. not to offend anybody that thinks this is super cool. I just reserve the right to be highly skeptical right now, highly skeptical. But hey, I mean, this is the new frontiers of the internet and blockchain and the new technologies, and people are exploring it. So here we go.
Okay, that was a very good summation. So it is a digital record, and a lot of them are based on some blockchain, right? So you're sort of, I am the owner of this. It is now my possession. What pushes a lot of the pricing up, on whether it's NBA clip, a rookie card for whoever, Jerry Rice, a jersey, whatever it is, it's the idea of scarcity. In my opinion, scarcity is the main driver of quite a few of these blockchain related ideas. In my opinion, I think it's one of the motivations for why Bitcoin has been the most successful of the tokens that have been created, because there is some limited sort, at least the understanding that there's limited supply. And so if you put something into this NFT category and you purchase it, you're the owner. So the idea of scarcity is promoting some of this forward pricing. And then it just really, at that point, becomes a trade. Some people have made a living trading baseball cards and sports memorabilia, and they have an expert level understanding of what a price might bear in a certain marketplace. There have been some pretty cool adaptations of NFTs through, you mentioned art. I was reading an article, if people are familiar with Grimes, she's Elon Musk's girlfriend.
Okay.
Do you know, have you seen what she's been able to do through some of these NFT platforms?
No, I haven't. I haven't.
It's wild. So I'm reading a story. This is from art.art blog. There you go. Cryptocurrency and blockchains have disrupted nearly all areas of our human life. So this is the article I'm reading from. Perhaps being most synonymous with financial services, you might be surprised to find that it has paved its way into the arts industry too. In a recent auction on Sunday night, Elon Musk's girlfriend Grimes made 5.8 million in a matter of minutes selling unique and edition items of her War Nymph collection. $5.8 million selling art online in this digital blockchain form. It's a startling amount of money.
Okay. So I see your Grimes article, and I'm going to raise you this article that broke today on CNBC. Beeple NFT becomes the most expensive ever sold at auction after fetching over $60 million. Somebody out there in the marketplace, in the world, just paid $60 million plus
Wait a
for
second.
something that lives on the internet.
How much? Somebody taped a banana to a whiteboard and sold it at an art auction, right?
Listen,
That happened?
We're not going to debate what's art, what's not art. Listen, I'm not kidding. This is a true story. This is a true story. So I used to bartend at a restaurant or a lounge, I should say, in New York City that was in the art district in Manhattan. And one day, all the studios, made big art studios were there, and I'd walk past them frequently. One day, I'm walking by a new studio, and they're putting up a new exhibit or display, and the best way I could explain what the art exhibit would be was, you think of like, you remember clear plastic 2-liter bottles, like soda bottles?
Okay.
It was all kinds of different bottles. And you remember they used to have 3-liter bottles, like, you'd have a 2-liter, but then you could get a 3-liter. So they had all these different types of plastic bottles, different shapes, different brands, and they had stripped the plastic coverings off of them. And they were all filled at like different levels with colored water or paint. And it was just, they made like my 7-year-old could do this given enough time and resources, right? And here this is in a corner art gallery in Manhattan in New York City being like the main display. So I'm not here to debate what's art and what isn't art, but it's getting a little wild. It's getting a little
Sounds
wild.
like we need to get your son making some art and posting it on the Nifty Gateway to see if we can't fetch a few mil.
I need to go comb through like all of my kids' finger paintings over the last 4 or 5 years and just start, getting them uploaded and create an NFT art gallery. I bet we can make some, we could have some seed money for college, college funds, right?
So it is the new up and coming idea. It has that newness aspect to it. It's digital. It's on the blockchain. They're checking off all of the speculative boxes at this point. They're getting some intriguing artists to contribute. So you've got the headline news of very popular artists that are now selling their artwork there. It's accessible, and it's a way to use some of your, some of these platforms are on Ethereum, so you're using your Ethereum coins for the first time maybe ever, besides just using it as an investable.
It's neat. I mean, it is highly speculative. I think like anything that's new, there's going to be some shakeouts along the way, but I also think that there'll be some uses that are uncovered, and one of them, that seems to be rising to the top is that this is a way for creators, to get paid for their work. Another way for creators to get paid for their work.
Let me interject here. Not only get paid on the original sale, but in some cases, because it's on the blockchain, there's a record of the transaction, potentially getting paid every time it sells.
Perpetuity.
So if there is a dramatic increase in price over time, the artist isn't left out of that profit. That it's possible they could continue to be compensated for the growth of the sales price. So I made a little list of things that have gone digital that used to be physical.
Okay.
We're just going to rattle off a few of these. Pictures. When's the last time you went to Walgreens and printed out pictures from actual film? Not only is it digital on your phone, now we got this from my mother-in-law last year. So it's one of those digital frames that we can upload pictures to it from 5 states away, and it just automatically cycles into her picture frame feed. It's pretty cool.
Wow. That is pretty cool.
So we have 3 families that just periodically update pictures into it. Okay. Letters, we know no one, that's now email communication, text message, some other form, blog post, whatever. Christmas cards. How many Christmas cards have gone digital in the last year or two?
A lot. Yeah.
Trading cards. So in 10 years, are we going to expect that a kid at a little league game is going to open up still a box of Topps trading cards and be carrying around these paper cards? Or is it going to be some digital form?
I don't know, man. Maybe, I know they're probably working on it right now for sure.
And then even some of the basics, just money transfers. I haven't written a check to a personal individual in a long time. You have Zelle, PayPal, Venmo, concert tickets. You're not even getting a paper ticket when you go to a concert now. It's all bounced back to your phone.
Who's going to concerts?
Well,
I want to know.
Oh, buddy, you better. The floodgates are about to open.
Listen, I probably talked about this on a podcast 2 years ago, but some friends and I, we got tickets to go see Garth Brooks in Charlotte, and that concert was supposed to happen last April or May.
Yes.
And it's been postponed. Now they're going to try to do it in September of this year. So hopefully it's been postponed 3 times already. So hopefully it'll happen eventually. But it's going to explode. To your point, man, the digital world is expanding tremendously.
So I can't knock that this is happening. This is probably going to continue to become even more important. I'm going back to this non-fungible token idea. Experiences, whether it's a trading card, an event that happened in sports, if you can take possession of it and quote unquote own this scarce item, I think this is going to continue. And it's could be benefits to the artist, and I'm not surprised to see artwork on there. do you think in 10 years we'll still be hanging original art paintings on our wall, or will it just be a digital frame and you just change what's in there based on your mood? You wake up one day and you're like, the Monet, I'm just going to put something else up there.
Well, here's the other thing. Now, to your point, what would digital frames could allow people to have, those really pricey type of, art displays in their home, but they could also change it out. So, I mean, it's neat. And I mean, I saw something the other day where they now have TVs that look like high priced art, where it's a TV. And so when it's not on, it's, so this thing is, listen, if there is enough demand, the market will create the supply. I mean, and it looks like right now there's so many people creating in so many different ways. It's a lot of it's speculation, right? But the people that are finding the wins, they're getting huge amounts of money. Jack Butcher is another one. I mean, he's a creator and does phenomenal stuff. Jack's handle is in his group company is Visualize Value. He created a one of a kind design and sold it, and I think he sold it for like $60,000, maybe. I mean, like just a one-off, just to do it. And I mean, this goes hand in hand with, having an audience, having, built-in following, and then being able to deliver something that's unique and, like you said, scarce.
So if he were to take that same piece of artwork, put it on a canvas, put a $60,000 price tag on it, and go try and sell it so you can hang it in your home, how's he fare against this new method of delivery? You don't have to answer that. I'm just saying that there is a real attraction to these artists to be following that path if they can make money that quickly and readily.
No doubt.
All right, my friend. So it's not going away. Just have to adopt it. Be careful. Know what you're buying. And it doesn't matter what it is. If it's stocks, if it's artwork, because it's still a zero-sum game. Somebody's going to win that transaction. Someone's going to lose.
Right. Well, I just, there's a lot of speculation that's happening right now. And obviously speculation isn't the same as investing. So, there are going to be people that have an itch that they want to scratch, and they might have a little bit of money to throw at some speculative things like that. But that's definitely not something I would ever propose. Like, we're going all in trying to hit a grand slam with something like that, because you could literally get burned. Case in point, I saw another blurb today. The GameStop saga still is continuing, but that GameStop dropped 50% in 15 minutes yesterday. Can you imagine? Like, those people that are still fighting that fight, it dropped 50% in 15 minutes. And I'm thinking, what's the outcome here? Like, what's the outcome here?
Yeah. What's the point of all of it? Yeah. That's hard to hodl through. It's not easy to have diamond hands.
Speaking of diamond hands, how about Jerry Jones and the Dallas Cowboys with some diamond hands on some Dak Prescott?
I don't even know what that
is. I had to talk about sports for a minute, man. I saw this. You know what I thought? Here's the financial lesson, right? Here's the financial lesson. And I say this a lot to people. I said, when you look over at your neighbors and you see how they're living life, and you're a little bit jealous, and you think, man, they just got it all. I want to be like them. And then you like overextend yourself to be like them. And in this case, the neighbors are the Houston Texans and Deshaun Watson, because Deshaun Watson signs this contract, and it kind of, Dak is right there in Dallas looking over at Houston. I mean, like, they just signed Deshaun to, this, I think, $140 million contract. So, they've been negotiating to get Dak this money. Lo and behold, Deshaun's not happy, probably not going to stay there. Yeah, I think they overpaid. That's my personal opinion, but Jerry Jones has got the pockets, so they open it up.
Well, yeah, I will add to that. There are some pretty impressive things that have happened in the last, let's say 30 years. That's an understatement, but just medically, what happened to Dak last season, having a compound fracture in his leg. I think it was his ankle area.
Right. It was ankle.
20, 30 years ago, that's probably game over, career ending injury. You're not coming back from that. The physical
Absolutely.
recovery that our top tier athletes have. And I think the health ramifications for anyone to go through a traumatic injury, to have a near full recovery, it's remarkable how well we can care for ourselves with the level of medical care that's available today. A couple of things popped up in my mind over the last week related to the stock market and some investing opportunities. We've talked quite a bit about speculation and meme stocks and in the popular momentum chatter, but quietly for the last several months, there's been a little bit of a rotation building underneath the surface of the headlines. And I wanted to fire a couple of those off to you here recently. Do you remember? I'll put you on the spot a little bit. One of the companies that got dropped from the Dow not too long ago, back in the end of August, used to be one of our largest company in the United States.
Was that Exxon?
Talking about Exxon.
Yeah.
So Exxon gets dropped from the Dow. I think that was August 31st of last year, replaced with one of the companies that hopped in there with Salesforce. So over the last 6 months, I'm looking at Y charts here, and we're recording this on March 11th. I'm checking out the performance of these two companies, and Exxon has a return over the last 6 months of 73.82%, in Salesforce minus 14.46%. So short term, 6 months, but it's interesting how things change. What we think is happening in August, that we have this massive company in Exxon that is, in our view, or maybe in my opinion, a troubled industry, oil and gas. There's a lot of movement to electric vehicles and conservation efforts, and that may be true over a 10 or 20 or 30 year period of time, but that does not mean it does not swing back. And they've had quite a recovery over the last 6 months.
Sure.
Second thing that's sort of been brewing underneath, this was sort of an eye-popping one for me. I was looking at small cap value. So this is the iShares Russell 2000 Value ETF. I'm looking at ticker IWN. Over the last 6 months, as compared to the Qs, QQQ, which is tracking basically NASDAQ 100, the performance difference, Michael, the Russell 2000 Value Index, so small cap value stocks, up 63.79% versus the Qs at 14.52. Qs actually trailing the S&P 500 over the last 6 months. Any thoughts? Are we just seeing some love being shining down on the unloved sectors that have really struggled compared to the Qs over the last decade or so?
Well, I think, my thinking is first thing I'm thinking is, well, let's zoom out, and what's that look like on a 3-year, 5-year basis? 6 months. I mean, you just think about where we're sitting right now today. March 11 last year, actually uncovered something I put on social media. March 11 in 2020, I put out there, like, don't worry, I'm stress eating for all of you, because the market was just nuts at that time. And so think about like where the 6 month period, beginning like March 1st last year, to September 1st, what that was like. So it's tough, and I think that there's a big lesson in that. First is that, understanding that there are market cycles, and, having the right time frame or the right frame of reference when you're looking at anything. So that was the first thing I thought. Second thing was, value has been getting beat down so badly. And you start to look at some of these ratios, like the PE ratios of some of the tech companies. We got companies going public, they have no earnings. There's a lot of stuff happening. And I think that there definitely could be some people out there that are starting to say, you know what, we're going to just rotate into companies that are good companies that have good balance sheets, good fundamentals. Maybe they're a little unloved right now, but we can explain to anyone who asks us why we own them, versus, some of the more speculative, some of the more, the high flying tech companies that are really riding this wave of, the technology expansion that we're seeing.
Yeah, it could be temporary for sure. And it could just be that the queues have run so far, so fast that the recovery coming out of the March drawdown was quick beyond my personal expectations. It just clambered back. We ran really hard from basically April to November. And maybe it was just time for that money to flow into something else that had been a little bit slower to recover. It lagged a little bit. It's been interesting to watch though over the last 5 months. Because it's not a 1 month or 2 month. It's been going on for a few months now.
Sure.
And we'll see if it continues. It's going to be hard to determine what's the next 6 months are going to look like because of the amount of assistance that's going to land in pocketbooks here in the next few days.
What's the dividend yield on that fund with Russell?
The IWN?
Yeah.
Let me take a look.
Because I think that's another thing to consider with interest rates being down.
So small cap value fund, the dividend yield is 1.27.
No, so it's nothing
still
crazy.
Pretty low,
yeah.
But those are pretty small companies too, relative.
Well, I think, like I said earlier, I mean, people are right now, trying to find ways to, have their cake and eat it too. And you've got the temptation is to lever up, on technology because there's such a quick, so much momentum built into that. And you got a lot of the names that, are commonplace right now. But then you go back and you look like, well, the small cap value space and how value has been beaten down. And you at some point you start saying, hey, this thing's going to cycle back around. And maybe like you're mentioning, this is part of it.
Right. So this is actually transferred even over to your favorite stock investor, Warren Buffett.
Oh, yeah.
Berkshire Hathaway, 6-month return, 21.21%. They've seen some opportunities to pick up a little steam against some of their competitors here recently too. I'm just joking with that. I always like to tease you about Buffett.
Yeah, no, I for anyone listening, I got no personal beef with Uncle Warren, but I just can't stand how people say they want to invest like Warren Buffett. I'm like, you can't. Like they literally tell you they want to buy like the entire company now. They don't even want a controlling interest. They want to own the company so that they don't have to, So it's fascinating. It's absolutely fascinating.
Okay, so just some observations in the market over the last few days that have caught my attention. That's been brewing for a while, and we've been seeing returns in different areas that are well received by all means. Glad to have some market growth in other areas other than just large cap technology companies. So it's a welcome change for anyone who's in a diversified portfolio. And I think allows these companies to take a little steam off some of the larger names that have been driving a lot of returns over the last 5 to 10 years. Let them take a little breather while some other components of those markets are picking up the pace, and we're not seeing a full sell-off like we did in March. We're seeing some of the more recognizable names sell off fairly decently, but we're not actually cratering the market along the way. So a welcome change. What else you got for us today, Michael?
One of the things I wanted to share today was a blog that was written by Shane Parrish, or it was on Farnam Street. So,
okay.
And I love it because it speaks to so much of the types of our, our thinking and our philosophies when it comes to financial planning. The reason you want to work with a financial advisor, the reason why, big time life decisions like retirement, life transitions, it really does pay to have someone that can work on your team in that regard. And, case in point, just this past week, I did a webinar on investing in real estate that's going to be up, soon. And, I had my friend Jay Reinhardt on there, and Jay has been very successful in his life, investing in real estate. He runs a real estate company. He also runs a real estate management company. He's a successful investor in his own right. And he said, the number one thing you have to have, he goes, have a strategy, have a plan for what you're trying to do. He goes, and have somebody help you. That he said those things are critical. And so this blog, it caught my attention because the title of it is Avoiding Bad Decisions. Avoiding bad decisions. And he gives a list of things, but he goes, number one is we're unintentionally stupid. Those are his words. Number one, we're unintentionally stupid. It's like we like to think we can rationally process information like a computer, but we can't. Cognitive biases explain why we made a bad decision, but rarely help us avoid them in the first place. It's better to focus on warning signs that signal something is about to go wrong. And he goes, if you're tired, you're emotional, you're in a rush, you're distracted, you're operating, in a group or working with an authority figure. So he says that. Number two, he says we solved the wrong problem, right? And one of the warning signs that he put in that one really stuck out to me. He goes, you let someone else define the problem for you. So think about our business, for instance. And you remember that Moneyball clip that we used to play where it's Brad Pitt and he's talking to the scouts and he's like, what's the problem? He goes, well, we know what the problem is, Billy. He goes, good. Tell me what the problem is. They're like, well, Billy, we know what the problem is. And he goes, excellent. Tell me what the problem,
the problem is.
So I'm sitting here thinking to myself, our industry, the financial services industry, spends billions of dollars on marketing to people and trying to tell people, about their magic number or this super formula or this, this thing that you got to do. And if you do X, Y, and Z, you'll have it. And, how many times we get into meetings with people and we talk to people and we're hearing them say all of these things that they've heard or that they've read. And we're like, okay, but what do you really want? Like, what is it that, what does a fulfilling life really look like to you? Like, what, what are you retiring to? Like, how are you going to spend your time? Well, what does that look like? And I think so often we get trapped into letting other people define our problems or define, what we're supposed to be doing. Number three, we use incorrect or insufficient information. Hello. I mean, we could go on, we could spend the rest of the time just talking about that, about how many things that are just put out there on the internet as though they are gospel, and they're either written with incomplete information or written with a total bias about one thing or another. And I think that is one of the more critical roles that financial planners like us and other professionals in our industry that we are taking on more and more are these curators of information, because there's so much information out there that we have to be able to separate fact from fiction, know what's reputable, what's credible, and what's not. Number four, we fail to learn. And I love this. It says, somebody with 20, he goes, a person that sits beside you at work and it says they have 20 years of experience, but keep making the same mistakes over and over. He says they don't have 20 years of experience. They have 1 year of experience repeated 20 times. He's like, if you can't learn, you can't get better. And then the last piece he puts, he says, we focus on optics over outcomes. Right. And so I'll speak on this personally. Right. So one of the little groups I'm a part of, one of the topics of discussion in the last week or two, it talks about like, where do you hide? And the purpose of that discussion was like, we all have mechanisms for coping when we know there are things we need to get done. We know that there are tasks or things that we need to do or changes we need to make or implement, but we find ways to fill up our time. We fill up our calendar. We hide, social media. We hide, I'll do that after I'll check Twitter really quick, or, I'll check on Facebook, see if anybody's posted anything. Or I'll, here's a big one, email. Oh, I got to check my email. And it's we fill up our calendars with things that make us busy, but they have almost zero impact on the outcome for whatever it is we're trying to do. And so from a financial planning standpoint, people might
that
get
that
online.
that helps us justify delaying tough decisions.
Exactly.
Mhm.
Exactly. So, I love that article. I'm going to put a link up in the show notes so anybody can go and read it. But to me, it speaks to so many things that we are constantly coaching our clients. When we're talking about when people are planning for retirement, how many times are we trying to say, all right, what is it that you really want? Let's figure that out. And, that's great when those light bulbs finally come on and people are like, oh, you mean I can really like create a path that's really mine. And it's also at the same time with people with financial planning, that are trying to build wealth. We know some things we need to do, but we need to get to it, for the people that are like, I'm just so busy. You know what? You're going to always be busy. You're going to always be busy, because that's how we're wired, especially when it's coming to doing the hard things. We find ways to make ourselves busy so we can justify the fact that we haven't gotten down to business yet. And, I just love that article. And I thought, man, there's so much truth in that.
It's an interesting perspective. The idea that resonates for me is when letting someone else define the problem. So of all the things that we sort of touched on, that is maybe where people are most susceptible to if they're visiting with another financial professional, if they feel outmanned or maybe not at an equal level of knowledge, that you could be led down a path that is not really solving the problem that you have or that you're concerned about. And it's easy to fall into the common trap of I'm worried about running out of money, or I'm worried about X, or whatever it may be. Maybe that's a concern, but it's not what's driving your motivation today, or what's really the decision tree that you have right in front of you. But if it's not discussed properly, it can be filled. A salesperson can fill the problem
Oh,
if they're not
absolutely.
careful. And so I like that. And the challenge is, can you really have an organic conversation with somebody to understand what truly is driving the decision today? And you have to be flexible, because if you can't be organic with it, then you're gonna have a challenge really solving people's problems.
I agree. And I think that just comes with, the onus is on us to, really educate people about, the different types of service offerings or service providers in our business, but also what true, in my view, what like true financial planning looks like, and that means that there's going to be times when, the planning team has an agenda because they want to be organized and be professional, but the client comes in, the client's got stuff that maybe isn't on that piece of paper. And okay, well, this is what's important to the client today. This is the stuff that they're thinking about that's keeping them awake at night. We can get to the pieces on the agenda at another time. Let's deal with what's in front of us right now, because to me, it's like those conversations sometimes can be the best conversations. And, it's also one of the reasons why I think people tend to avoid coming in to the financial planning office, because they know they're going to have to talk about, the nuts and bolts of it, when there's this whole emotional component with feelings and stress and all these different things attached that doesn't get addressed, and it never really gets fully diagnosed in the planning room. And so it's just like, and that's not the way, that's not what holistic planning is. And I love that he mentions that, letting other people define the problem, and that's to me, if you're listening to this, one of the things that you should be looking for in a planning team is someone that asks you a question, like, hey, is there anything we need to talk about today that's not on the agenda, or is there anything that you're thinking about that we need to make sure we cover today while we have time together? Those are hallmarks of someone who is looking at the person in the chair and not just looking at like, hey, how do we just process this next transaction?
Very good. I like it. All right, Michael. Well, we covered a lot of ground today.
Absolutely, man. Are you planning to watch March Madness?
Who? What?
March Madness.
What's that? What's basketball?
Yeah, man. I think they're gonna try to have a tournament. Maybe it's gonna look different than years past, but they're gonna do something. I know I'm for one. I've been reading a lot of things that I think are very encouraging. That we're probably should be expecting to see some normalcy returning here in the next couple of months, especially as it gets warmer and more people get vaccinated. So I'm excited for that. I'm hoping that we turn the corner and we put this thing in the rear view and full speed ahead.
Absolutely. It's coming.
Yes.
The wave of fun outdoors is coming.
Yeah, I know. So with that being said, thank you guys for listening to the show. I'll make sure that we put in the references and the articles we talked about in the show notes. So if you want to go read them or check them out for yourself, feel free to do that. You can always reach out to us. We have a email address, themoneyhuddle@vcplanning.com. If there's someone you would like to us to talk to, we do get interview requests to be on the show. We look through those, and if we find somebody we think would be valuable for our listeners, we absolutely would entertain that. And if there's a topic you'd like us to talk about, we're open for that as well. We want to know what you guys are listening to, what you're thinking about, how we can help, and anything that we could talk about on the show that would be relevant. Please let us know. Thank you for listening. And as always, we'll talk to you next time.